I'm Andrew Northage. I'm a partner at Walker Morris and head of the International Trade Sector Group. I'm delighted to be joined today by Professor Frank McDonald from the Leeds University Business School. Thanks again, Frank, for joining us. We spoke a year ago on some really interesting topics around keeping trade moving, and we're delighted that you've been able to join us again to further that discussion almost 12 months on, when the world looks a little bit different. And I suppose if I can start, the first question I have is, what do you perceive to be the biggest risk currently to business growth, and why?
Okay, well, thank you very much for inviting me back to have a discussion with you about these things. I'm going to say something about risk, and I think the real issue that is not risk in the sense that risk is often defined by academics, which means that you can construct probability of outcomes. So you can say there's a 50% chance, a 10% chance, whatever. I think the real problem that we've got now is uncertainty. And that is that you can't construct probabilities. And I think now this is a real problem caused by the crisis, caused also by Brexit, whatever happens, caused also by things like the change in the world trade environment. Things are getting rather het up. There's the China-America dispute, all sorts of things going on. The World Trade Organization is in a bit of chaos. They're trying to appoint a new leader of the World Trade Organization. And so there's a lot of what I would call uncertainty. So we can't construct a probability distribution of this. We can't say, well, if we undertake this investment, there's a 10% chance that it will go very bad. There's a 50% chance that it will be reasonable and so on. The real problem is we don't know. And so that, I think, is the biggest handicap. And also, one of the problems with uncertainty is one of the responses to it is to do nothing. In other words, dig into the bunker. And of course, this will make the growth prospects worse because investment decisions will be put on hold, your employment decisions will be put on hold, decisions about perhaps expanding or starting exporting, or all these things will be put on hold. And that will just make, I think, the situation worse. So I think it's quite a problematic period to be trying to keep trade moving, as they say. So I'm sorry that's not very specific, but I think that this, I think, is the big problem. Uncertainty is the big problem.
Yeah, and I suppose, do you foresee any of the uncertainty falling away and becoming more certain over the coming months?
Well, the pandemic, of course, I think it's anybody's guess, and I'm certainly no expert in epidemiology, so I can't really comment on that. I would hope that things would stabilize and we would see some sort of route out of lockdown and so on. But where I can see some improvement in uncertainty is Brexit. I think we have to come to some sort of conclusion by the end of the year. So that uncertainty, I think, will certainly diminish, and there'll perhaps be more certainty. My concern there is I'm not sure if many businesses are prepared for whatever the outcome might be. I think some people, I've been in discussion with some businesses, and they seem to think, well, if we get a deal, that will mean we can carry on as normal. But that's not what's going to happen. And I fear that that's also a risk to growth, because particularly I think some of our smaller companies and medium-sized companies are not, I think, prepared for. There will be additional costs. There will be additional risks of doing trade within the European Union. It's not clear to me that many firms are, I think, not aware of this, or if they are aware of this, the uncertainty is making them reluctant to do anything. And it's going to hit them because it's going to start in the beginning of 2021. So I think that's a big problem, which the uncertainty will be reduced, but I'm not sure if many firms are taking action now. Scenario building, like what happens if we get a good trade deal, what are the implications, what happens if there's no trade deal. And I think large multinationals have certainly have got this well looked after, but I fear for some small and medium-sized companies.
So I suppose the question then is for the smaller and medium-sized businesses, Frank. It sounds like you foresee the next few months quite rocky for them, in terms of Brexit. Is that something that they can then, do you think, pick up when the new year comes, or will they have already lost too much ground by then?
I think a lot really depends on their strength. I think many marginal companies involved in exporting, for example, the European Union, will probably have to exit, because if the margins on European Union exporting and other types of international activities are low, even I think with a good trade deal, the additional costs that are going to come from finally leaving. I mean, I think many people think we've left, or we have officially, but we're still trading under, as you know, the old rules. When they go, and I think some small companies that are marginal to this need to really look at, should we carry on with this, or should we try and move up the value chain so that there's more of a margin for us to cope with these costs? Again, I'm not sure if this is happening. And also, I think that many companies will think, well, I don't export, I don't engage with trade, but they do, because they source things from the European Union. And that's another thing I think that small and medium-sized companies need to be aware of. I'm importing, sometimes they're not even aware of where their imports are coming from. And they'll be faced with rise in the price of their source of materials. And again, maybe they need to be looking at their supply chain.
Yeah. Well, that leads nicely on, because one of the areas that we've been looking at with clients and speaking with other contributors to this series of interviews is on supply chains. Do you see then that there are a lot of companies out there that haven't got that grip on the supply chains that they will need in the coming months and years?
I fear that my answer has to be yes. Having said that, if you pushed me and said, where's the data to prove it, I might be more struggling. But the impression I get, and from some of the studies that have been done, which I have seen, I think particularly among smaller companies, a lot of them have, to all intents and purposes, before Brexit, your supply chain coming from the European Union didn't make any much difference if it came from Lancashire and you were in Yorkshire. But that will no longer be the case. And again, I think many companies are probably used to the supply chain as operating smoothly. And I've talked to SME managers, for example, not entirely clear where some of their stuff comes from. In particular, it's the chain. So they might be buying from a British supplier, but then 90% of the British supplier could be imports from the European Union. And I think they're often not aware of this. So that I would agree with you, and pleased to hear that your firm is encouraging this and helping with this. I think firms do need to get to grips with the supply chain. The problem being, of course, we still don't know what the actual trading conditions will be, which makes it quite difficult for these poor firms. I do feel for them, I have to say.
Yeah. And it seems that this is perhaps coming to sharper focus now, because the transition arrangement will be ending on the 31st of December. So I think it might be fair to say that this issue has been lurking around and has perhaps not been recognised before now because of the situation with Brexit. But do you perceive that there are any risks to growth that have arisen in the last 12 months, other than COVID, of course?
Yes, I think that the pandemic itself has caused effects that will affect growth. In particular, we could see a decimation of the service sector, which will mean that the underlying growth of the economy will be quite poor. Now, I know there's a lot of debate about this, and the Bank of England, for example, is suggesting that we will have quite a quick bounce back and growth will catch up. I'm less sanguine about this, and particularly the size of the service sector in Britain. Britain is heavily dependent on the service sector. And I think large parts of it are going to be in serious problems. I think the other thing about this which is affecting it is during lockdown, a lot of us have been working from home. I think you've been working from home and I've been working from home. In fact, I was just contemplating the other day, although I work in the University of Leeds, I haven't been in the University of Leeds since March. And things have flowed along. And this, I think, connects to something, and I think we may have discussed this last time, which is the digital revolution. The digital revolution is showing us that a lot of things can be done digitally or virtually. Now, the implication of this for growth is, if you've discovered as a firm, well, I can operate fairly efficiently virtually in many areas. I don't need to have these people coming into my expensive offices. This, I think, could undermine growth in Britain by firms deciding, well, I don't even have to do this in Britain. You know, I could hire accountants and, dare I say it, to a law firm, lawyers in India, and at lower cost. And this is fine for the firms, of course. They're getting a lower cost of services of these types, and perhaps also, going back to supply chains, they'll be able to get a tighter supply chain, a lower cost supply chain. But it will mean that there will be an undermining of growth in the United Kingdom, which will affect the demand in the United Kingdom. So I think that's another factor. And this digital revolution, which is going on regardless of the crisis, I think that's been boosted by the crisis. The other thing I would say about that, though, is many of the defects of doing things virtually have also been exposed. So maybe the threat to growth in the United Kingdom is not as great, because some of the things that we think we can do virtually, I think we can't. I don't know how you found it as a law firm, but certainly in the university, although we're doing things virtually, it's not the same as face-to-face. So research programs are sort of stuttering a bit. Development, innovation, and teaching, the virtual side is not happening because it doesn't work very well on Teams or Zoom meetings, because you've got a sea of faces and it just doesn't work well. So the overall thing I think about this is the real solution to high growth or returning to good growth in the United Kingdom is for firms to move up the value chain such that they can still prosper, even though they'll be going to other sources, virtual sources for supply and so on, but they're moving up the value chain, or they're providing sort of unique products. So some of this needn't be particularly high tech, artisan cheese and things like that are something which can command a good margin. And I think the real sufferers from this as firms are going to be people that are low down in the value chain and are operating in low margins. I think they're going to find the condition difficult, and that will affect growth, because that's a large part of the British economy, and I'm afraid to say it's a large part of the Yorkshire economy. A lot of the Yorkshire economy is fairly low value added, low margin stuff, and I think that's going to be affected by the crisis, by Brexit, by this digital revolution. And so I'm thinking that there'll be it'll take us some time, I think, to catch up what we've lost and get back to the growth trajectory we're on. I think we're talking several years when we're back. So it's a difficult time ahead, I think.
So in terms of a business moving up the value chain, would you suggest and recommend that they still continue looking at international growth, or should they focus more on their UK strategy?
Yes, I think this is a very important question. I think for firms that would struggle to export, they need to concentrate on the British market. Here, I think a lot would depend on what trade arrangements we eventually end up with. And this is not just a matter for Brexit, of course, it's also a matter for the other trade agreements that we're making. Just recently had an agreement with Japan, for example. We may get an agreement with the United States at some stage. And so a lot would really depend on the additional costs or the reduction in costs that comes from the trade agreements that are coming out. But for many low value added companies, I suspect the issue is going to be that not so much should they be exporting, but they'll be faced perhaps with increased foreign competition, with often maybe lower cost and better quality. So I think some of these companies that are lower down the value chain need to seriously think about how they can move up. And again, this often is thought of, it's investment in high technology, and so often it's a matter of, getting something different, not necessarily high tech, artisan cheese and, jam, and for a small company that can get a good market, but they can't be just producing commodities of cheese and so on. I think that's going to become more competitive. Now, with regard to your question about concentrating exporting, I think that the Brexiteers are right in one sense, in that there are opportunities in some of the fastest growing markets in the world and emerging economies. And this is not just China. It's mainly an Asian phenomenon, but there are many countries in the world that are growing fast. And particularly China is moving towards importing more, both to satisfy the demand of a growing affluent middle class in China, and also to up the level of technology. So there are big markets there. And I think if providing the products right and the margins right, the problem, I think, is going to be coping not so much with the trade regulation of exporting and engaging in foreign direct investment, is dealing with a very different institutional and cultural environment. And I think there needs to be more attention paid to this. And it's not sort of, airport management books about, you don't show the soles of your feet to Indonesian people. Things. It's much more like, how do they do business? For example, in China, these business groups are very important. And there's collections of networks of Chinese firms, foreign firms, governmental agencies. And if you don't know how business is done in China, for example, or India, it's very difficult to penetrate these markets and establish yourself into their supply chains and into their global value chains. So I think the issue is there needs to be a much more learning, and they need to clear the shelves of airport management consultancy books and look at the real issues about how do they do business. This idea that, Chinese people are going to be very offended if you do X, Y, and Z. Chinese people are going to be very offended if you don't offer them the type of product and the price that they want. That's what's really going to upset them. And you've got to figure out how they do business. And they don't do business like we do business in Britain. So I think this is the challenge. I'm saying, yes, I think they should look to markets. And if they don't, I think we're going to be in some problems with growth in Britain and employment in Britain. But it's a real challenge for them to tackle some of these.
Yeah. As ever, Frank, you've given us a lot to think about there. If I could ask just one final question, if you could distill everything that you've said and maybe some things that you haven't into one piece of advice for keeping trade moving, what would that be?
That's a difficult question. The word that keeps coming up into my thinking is be creative. Don't depend on past procedures, past experience. Be creative. Gather data, gather knowledge, and be creative. Be innovative, because I think this is the future for an economy like Britain and firms in an economy like Britain. We have to be, creating these high value added, high margin products, and that does require a lot of creative thinking. We also need to be thinking about how do we penetrate these fast-growing emerging markets that are so different from ours? And to do that, I suppose the word that keep them company, you need to be creative. You need to be creative thinking, which is challenging because I know they're very busy just keeping the thing going. But that would be my advice. Be creative and be ambitious. I think also there's often a lack of ambition.
Yeah. So
that would be. Having said that, I'm very aware of the fact that I'm not a doer, I'm an observer. It's easy to come out with advice when you don't have to do. So I'm very aware of that.
No, that fascinating as always, Frank. Professor Frank McDonald, thanks again.
Thank you very much. I appreciated this opportunity. Thank you.
Thank you.